friends, welcome to the show. Let me just do a quick impression before we dive into the Bitcoin technical analysis, and you can guess who it is over the period of the next couple of minutes. So I'll leave that with you. Let's take a look at the Bitcoin technical analysis, price, action stuff. Here we go. And just check out yesterday's episode actually as well. Look at this, 109 views. Wow, that's actually really, really, really good for me. And I got a dislike on there as well. Wonder what that was all about, because if we just dive over to the charts and check out where the prices have been over the last 24 hours, you will see that we've had fruition of this head and shoulders pattern that we had drawn on the charts coming down to fulfill our measured move. I just dive over here to where we have it on here, and then I have a question for you. Did you have a cow, man, or not? So that's what happened here. We've done that, and where did we find support coming in at? Well, the lower end of this parallel channel that we had drawn in the background. Currently being resisted by the median line of that parallel channel. So this was your head and shoulders here. We talked about this quite a fair bit, to be honest, in the recent past, talking about it. I think we started talking about it probably over, let's go to the 24-hour time frame. So he's probably started talking about it maybe up when we did our head. I'm not really sure. I can't remember. Been quite a while that we've had this as an idea. And then when the prices came down to this point here, we said, look, if they come up towards this area and don't break 12,000 again, then maybe we're dropping down. And I started off yesterday's episode singing that song by Rita Ora, saying, over the hills and far away, a million miles from 12K. And I was dropping many, many hints there, although I do like to leave the sort of the decision making up to you about where we could be going next and what have we done, only exactly what I said we would be doing. So, that's very nice. It's very, very nice indeed. Now, you might have tuned into the episode, and the one down like that I got could have happened whenever the prices were in around about this region here, say 10,800, and somebody might have been thinking, but you said it was going to go on further down and it hasn't done that yet, or something crazy like that. Well, we just had to be a bit patient on it. Now, there's also this chat over here, and if you want to see where we're being resisted by currently, it is indeed the lower warning line of our pitchfork. Now, if I just copy and paste this parallel channel, clone, and bring it on down here, bring it on down, then where did the prices manage to go in terms of the pitchfork? Now, this is how you can use pitchforks if you want to extend them out. You just draw a parallel channel, sort of covering off the measurement of one of these sort of channels here, and then pop it on the side, and you've got an extended one. And where do we see the prices having been supported by in terms of their close? Well, lo and behold, is right here at the edge of this parallel channel. Now, you wouldn't need to have that on there. Many other things gave us an idea of where that support could come in at. For instance, this 236 Fibonacci retracement right in there at 10,140 or so. And as you can see, the lows of today have been down there at 10,086, and so far, we've been finding support in here and finding resistance at the lower warning line of that parallel channel. So that's where we've been, and let's take a look here in a second at where we could be going next, of course, right? But did you get that impression? I'll do it for you one last time. I have to kind of look really sad, but bland, sad, bland. I don't know. Do you get it? A lot to do with this haircut that I have right now. Okay, jump on over here. 10 points if you got it. That's right. An impression of Edward Scissorhands. Lovely jubbly. Good stuff. I hope you're enjoying the show, getting some value, and you want to hit that like button and perhaps the subscribe button. I've got a little target as well. I want to see if we can get to 2,000 subscribers within the next 2 weeks. I've even drawn a logo for it over here on the chain link charts. 2K in 2 weeks with a smiley face. Can we do it? Let's make it full screen. Can we do it? Let's see. Be a part of that party. Now, what did the 109 people that tuned into? I've already covered that. 109 people that tuned in yesterday, of course, got to take full advantage of this head and shoulders type move over here. Of course, the textbooks will tell you that it will go like most likely sort of 60%, and that's what we've had happen so far. And the prices actually dropped down to sub 10K areas. As you can see here on BitMEX, is that what this is? No, this isn't BitMEX. This is Bitstamp. On Bitstamp, we saw the prices go all the way down to 99.91. What about on BitMEX? Well, as you can see here, they went all the way down to 99.24. So some people were able to benefit from that in order to so-called buy the dip. Now, what would be a warning about buying the dip? Let's just have a sort of let's just check in with that as a concept. And we'll go over to the Coinbase the CME charts for this one and talk about buying the dip. Of course, as well, the measured move off of this thing fulfilled fairly nicely with this move down the way. And where did we come then? All the way down to $10,000, $10,015. I almost said $10,000.15 there, looking at that number. Silly me. Never trust anybody you watch on YouTube. Hey, I'm not a financial advisor. Now this is financial advice. Lol, lol, lol. So where did we come down to? Well, if we look at this and kind of, from a broad perspective and looking at it from this sort of zoomed out bird's eye view of things, you can see that it came right down to where we have the top end of that gap on the CME charts. And actually now what we need to do is seriously face facts. Are we going to go in and fill in this gap? Now, if we did do that, and let's just take a measuring stick from the top here of this thing and go all the way down towards the bottom end, you're talking about a 23% move towards the downside. So far, we've come 20%. It's only an additional 3% on down from where we were before in order to go in there and fill that out. And if that were to happen over here on the spot prices, what could we be looking at? Well, we could be looking at the prices coming down towards, let's see if I were to just kind of stick in some sort of, we'll use the don't have a cow man box, giving us our sort of potential downside target here. Coming in and more or less, if we want to consider it this way, retesting the symmetrical triangle that we had on the charts for the longest time if we did come down and into this area here indeed. And at the lower side of this gap here comes in at 9,665, and there's a premium on the CME charts, and as you can see right now, you're talking about 55 buckaroonies. So if we did come all the way down to fill in this gap, and let's just say we went no further, that would be 9,600, say, then on the spot prices. So I'll stick the don't have a cow man box in there about 9,600, and you could say, well, then perhaps in and around about this area could be a target for us if we're looking for further continuation towards the downside. Now, further continuation towards the downside, what are you saying, Rocky? I've been looking at crypto Twitter and everybody's been telling me to buy the dip. They said buy the dip over here. They said buy the dip over here. They said buy the dip over here. And now you're talking about how it could be going down here. Nobody said buy the plunge. Nobody said be the plunge protection team. Nobody even said short this, apart from perhaps, what you could have been looking at on the channel here if you're able to read between the lines. But let's cut this up a wee bit into bite-sized pieces, shall we, and jump down towards the 4-hour time frame and say, well, realistically, this has to be considered to be a downward trend since the 1st of September. Since the 1st of September. Now, you will remember as well that I spoke about the potential for all of this here on the monthly time frame as well, back then when we were looking at the monthly close, which was the last biggest watched episode on the channel. If we go down towards the monthly close one, then it got, how many views did it get? 213 on the monthly close one. So let's not beat about the bush. A lot of people were aware of all of this sort of price action coming up. Of course, everybody in the Discord as well would have been too. And yeah, so this is what, let me just leave the eat my shorts side on this, because we're talking about this as being a BART. Let's go over to the 24-hour time frame so I can make my eat my shorts thing line up properly. Eat my shorts here on this part of the BART. So, so in the 4-hour time frame, 4-hour time frame, we're looking at a downward trend, bringing up the oscillators then. If this is considered to be a low here, and perhaps over here is our previous low, let's look and see, looking at the lows in the oscillators, if there's any bullish divergence. Of course, when I talk about it here, let's just put a wee label on here so people know, looking lows. So we're talking about for bearish divergence, we want to be looking at the lows. Yeah, okay, cool. Here we want to be looking at the lows as well, and on the MACD, looking at the lows. Okay, that's what you want to be doing. And over here on the DMI, what do you want to do? Just want to draw this out real easy for everybody. You want to be looking at the highs, okay? You want to be looking at the highs. So we'll look at this one in a second, but we'll look at the other three first and check in with our lows as part of this to see if there's any bullish divergence, okay? Because if you were wanting to see this be some sort of bottom, then hopefully you'd get some sort of counter trend indication, and that would obviously be coming from the oscillators as being your primary source, looking for that counter trend type move. So let's see, 1, 2, or 3, whatever. Bring this up full screen. I don't need to. It's quite obvious, isn't it? There's none. There's just bearish convergence there, right? There's just bearish convergence. That's all there really is. Let's take a look here at the stochastics. Again, same story. Let's take a look then at the MACD. Again, same story. So that's not particularly positive for all of you bullas out there looking to be particularly tastic off the back of this. And let's then see, have we got any divergence over here on the DMI? So looking at this, you've got this pink line, and that's the negative DI, or the DI minus, as I like to call it. And you're looking here, and you can see there's this high and a subsequent higher high, showing an increase in strength as this is going on. And in fact, you'd be talking about movement, and the strength of that movement has increased as we've had this downward price action, and therefore it's not divergent, right? So we've got no divergence here on any of these things. That's a quick little sort of takeaway for you, quick little lesson in terms of how that would all work. In which case, you could be looking down towards these lower targets yet again. And if we were to bring up something like the VPVR, I'm sure then we would see that there was obviously a lot of activity up here in what could be considered to be some sort of topping formation. Shout out to Lisa N. Edwards. No, this was not an inverse head and shoulders. It was a head and shoulders. Recheck that rule book, baby doll. I'm sure you're going to want to read it twice, okay? As we spoke about as well quite clearly when I was checking out the Twitter feed for whole Lisa N. Edwards. Let's check in with what Lisa N. Edwards has actually been saying recently. She probably hates me now. Lisa N. Edwards. Where are you? Where are you? Lisa Edwards. Here we go. Let's see what's she been talking about. Direct should retrace a little bit, just a little bit, then head to next moving average. Bulls are back for the weekend. That's what she's saying. Cool. Let's see what if she went back on her thing. Just an idea here. I can't take off the bull goggles, no matter how hard I try, and we are severely oversold. What were the prices like here on this one, Lisa? Oh, this was up here, was it? We were severely oversold up there at that 11,000. Or was it? Where did the prices come down to? I don't know. Severely oversold. It's hard to see because it's so bright outside right now. There was raining a second ago, but it's not raining anymore. Severely oversold. What indicator is that you've got on there? Severely oversold. There you go. Severely oversold. I'll give you another quick lesson in a second here about this whole oversold notion, right? Let me see. Where does she say this about the inverted head and shoulders? Hit my buys. It hit my buys. It says she hit her buys. Good on you, Lisa. I'm happy for you. Where is it? 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 I'm sorry. You probably don't want to sort of see me do a sort of takedown video, but I just really think that it's important that people learn these lessons when I've pointed them out in the past. She posts so much rubbish, huh? What did she say about ETH bounce? ETH bounced here, deeper than expected, but strong region as a cross support at $500 next stop. $500 next stop. Not a trader. Not a trader. So she's apparently been trading longer than I have. There you go. Unpopular opinion. Moving average retest. Moving average retest. Oh, EMA is 921 crossing. Oh, wow. Oh, yeah, we're going up from 11,300. Why would you follow? Why would you read this crap? Okay, bored of this. Anyway, she was totally wrong. There wasn't an inverted head and shoulders on the charts. If I just go find, maybe I'll see inverse. No, God. No. Oh, here we go. Check it out. Inverse head and shoulders, everybody. This is Litecoin. Well, she was doing the same sort of trick here, I suppose. Litecoin. Where was the Bitcoin one? I can't find the Bitcoin one. Screw it. Well, you get the point, right? You get the point. Let's also check in with the fractal. The fractal. You remember the banana, moon, and stars? The banana, moon, and stars. Where's the banana, moon, and stars at? Oh yeah, it kind of got deleted. Oh yeah, I don't know why it got deleted. But all my banana, moon, and stars got deleted. Anyway, that fractal completely pants. You may have noticed an episode coming out from Kevin Svensson yesterday or so, I don't know, a couple of days ago maybe, talking about the fractal and how the next target's 13,800. Well, sorry mate, completely wrong yet again. Check back to my fractal episode from 2 days ago, I think, where I said the same thing, which, you were really, really quick on the uptake for that one, Mateo. And yeah, totally crap. You were wrong about that. And that's why fractals are not to be looked at. They are complete and absolute nonsense. What else did I want to show you here? Oh yeah, do you remember here I kind of accidentally, I wasn't really wanting to sort of go on about it, I accidentally took up this VWAP, this anchored VWAP picture the other day. Another thing that you might be wanting to be interested in and seeing that when the prices dropped down past both of these areas, that you'd have been better off shorting it. You know, you'd been better off shorting it this whole time had you on average bought or on average sold. Since either of these times here, say on this green line, you were buying all of the dips like people were telling you to. And you did it at the most common areas of trading where the most volume was during any of those trading periods. Or from over here, say, when we first initially went up and you'd constantly shorted it from, say, that 11,000 area, who's winning now? Well, overall, as you can see, as soon as we went past this first one, we sort of saw that drop off happen, came back up, kind of got fairly close to the second one again, and then dropped off again. You know, I'm not going to go into how you use anchored VWAPs or anything like that. This isn't even a textbook example here. But I just wanted to show you that that's what we've been dealing with. Okay, so we're 15 minutes into this episode. I've already said everything that I kind of wanted to say, and I've already done all of the takedowns that I wanted to do in regards to people who've been shilling their own nonsense out there. Just be very careful who you follow. It's basically the takeaway from this one. And if you tuned into this one today, you know you've tuned into the right place. So what are we looking at? Well, will we get above this? Will we get above this here on the median side of this parallel channel? And if we did, then what would we be getting? If we were to look at the highs instead during this period, you'd be looking for, what would that be if you're looking at the highs in this during this downward movement? They'd be looking at for hidden bullish divergence. So let's just see if the RSI comes up past this period over here and puts in a high, then and overall we don't actually come back up higher than 11,500. Then what you're looking at anywhere between here, you know, $1,000 you've got to push past before you'd be able to do anything other than say that there's hidden bearish divergence on the charts here, right? Okay, so that's the situation. Now, bigger picture, this is an uptrend. It has been since March. Has been an uptrend since March, okay? Has been. And until such times, let's say, where would you want to call it? I mean, obviously, you could give me, and I told you as well, don't be giving me the credit for this. I don't like that, is despite the fact that, of course, we said here in the run-up to that this was, you know, we told everybody exactly why, broke down as well the reasons on the show why people, even very experienced traders, struggle in professional environments. I've seen it with my own eyeballs, struggle to see tops in trending markets. They really, really severely struggle with that. And we talked about all the reasons why that would maybe be the case here. I went into the Discord and warned everybody and all that sort of jazz. So all that happened. Also, we talked about the severe chance of this being a bottom as well. We talked about that back here in March. Whenever what you call her? It's a new dawn. It's a new day. What's she called again? That singer. Oh, I can't believe I've forgotten her name. Anyway, her. I'm going to put that song on the video. You can go back and check out the videos from back then if you want to. It's all public record, of course, all of this chat. So, you know, this here, but it has been an uptrend. And if you were to then say that we kind of changed the macro picture, well, you'd be looking at it, I suppose, perhaps in amongst this big old symmetrical triangle area here. And if you want to put that into a bit more context and in terms of a bigger time frame, getting rid of all the noise in the chart, because I know we all like a clean chart, it kind of becomes more obvious over here in the weekly time frame, taking out these mid 9,000 areas in terms of a weekly close. And if you want to be sort of, you know, really sort of playing it more correctly, I suppose you'd have to look towards the 9,000 area. Take that out, then of course what you would be looking at overall is potentially a continuation of a downward trend overall from on this thing with this top over here, which went higher than the previous top. Now, if you were to look at this and say this is an uptrend and you're comparing these two tops here, then you're looking at what would you be looking at during an uptrend for divergence? You'd be looking at the highs, okay? And between this high and this high here, this high and this high here, you can quite clearly see that this didn't come any higher on the RSI, didn't do it on the Stochastics, didn't do it on the DMI, didn't do it on the MACD, and we didn't actually have this enthusiasm on terms of this bull run, which happened back in sort of the January 2019 up until July 2019 period. Well, we haven't had that in this March until September bull run this time around, and actually we came in with bearish divergence overall. So that's what to look out for. But we do have an uptrend since March. Okay, so we are in that bullish stance post-halving world, and what we can look to then is 9,000, right? So anyway, I'm going to be leaving you for the weekend. I'm pretty sure with all the sort of information I put out recently that you're more than competent and fully capable of going on and doing great technical analysis yourself. So go ahead and do that and join the Discord for more chit chat over the weekend. And yeah, I really do appreciate everybody tuning in and liking and subscribing and sharing it with friends and all that sort of good stuff. I really, really do appreciate it. And I hope that you really appreciate it too. I hope that your account actually appreciates it as well, having had all that information laid out in black and white for you. Now, actually, I've been talking about this a lot recently in the Discord and on the show from time to time. I'm now going to revert back to being more sort of obfuscated in terms of giving you ideas, targets for where we'd be going. Just got a bit of dirt off the screen there. Where we'd be going in terms of the next wee while. I'm going to go back to the sort of the usual stance. I thought it was really important to go 99% of the way towards telling you exactly how to trade this during a period where I'm sure so many people would have been washed out in their trading in this period of time. And now I'm going to go back to being a little bit more sort of cryptic with it, because I want you to be able to actually develop, teach a man to fish and all the rest of it. It's just I didn't want the man I was teaching to fish to get washed away in a high tide. Like you're teaching a man to fish and you forget to tell him where to stand in terms of not being drowned, then your lessons about fishing are going to go on deaf, dead ears, are they not? So that's what was going on there. Now I'm going to go back to, this is the last episode that I'll be putting out. This has got, like radically obvious chat about what could be happening next, and of course as well, if we do go up that $1,000 and we do push it up and we manage to put in a higher high without any sort of divergence on the go, that'd be totally fine. And of course, during a bull run, a pullback of what we have here, 20% odd, that's totally fine. What we could be looking at is a 30% pullback, though, as we saw in the previous bull runs in the run up towards the all-time highs back in 2017 time. Okay, so we could still have that on the go, and that's whenever things would get really the equivalent of what we saw here in terms of everybody going mental in terms of their bullishness and being completely wrong, every single person on YouTube, including the people who I have a lot of respect for, of which there are not millions of. There's not a ton of people out there putting out properly good technical analysis, just me. They were all wrong. Everybody was wrong, right? And I'm not a perma bull or a perma bear or any of that sort of stuff. I just look at the way it is, So that's what we're looking at. Okay, thanks so much for tuning in. Really do appreciate it. And I will catch you in the next episode. There's like other things that we talked about here. Look at the body here on that line. Look at the wick here on that line. I mean, there's just so much good stuff. So much. It is absolutely phenomenal. It's phenomenal. Anyway, share it with your friends. I really do want you to know that if you look between this high and the most recent high, this high and the most recent high, that's not bearishly divergent in terms of just, February until August here on the weekly time frame, unlike the sort of the bigger one where it's sort of divergent there. So I want you to remember that this is indeed a bull market, and that we have indeed done that. And if we get supported by any of these things like, this line down here, for instance, of this sort of formally descending, broadening wedge structure or whatever, then of course, you can still remain bullish on it. So, don't count your chickens before they hatch if we do go down towards those areas. And but anyway, Lisa N. Edwards says that we've got a bullish weekend coming up. We might, what I like to call that is weekend relief. Of course, the retail market kicks in as the sort of institutional chappies leave everything until they come back on Monday. So there's, with that lower liquidity, you could see some of that. I would just be cautious about anything under 11,500, right? And I know that is $1,000 away. And great. Catch you next time.